Now, in my last strategy video, I talked about how you can use the combination of the moving average together with the relative strength index, and you guys loved it. I even got screenshots from you guys showing me the profits you've been able to make from it. So in this video, we're going to be taking the step even more higher. Now, in case you don't know about this strategy, let me bring you to speed. Now, what the relative strength index actually helps you to do is to find out points of oversold in the market and overbought in the market. Oversold is a point where the market gets to that it can't continue to go down further, and overbought is a point where the market gets to that it can't continue to go up further. Now, the moving average, what the moving average actually represents is whenever you see price above the moving averages, it's trying to indicate a buy in the market, and whenever you see price below the moving averages, it's trying to indicate a sell in the market. And in that video, I actually explain how you can actually use both of these things to work together. Now, the first one we're going to be replacing right here is the relative strength index. Now, the relative strength index is actually a very good indicator, but there's something that you can actually use that is even way more better than the relative strength index. Now, what you want to do right here is that you want to tap into this F point right here and search for the stochastics indicator. Now, when you get the stochastic indicator, it comes in with this default settings right here, but what you're going to do right now is that you're going to change every of these things. Now, for the percent key period, we're going to be changing it from 5 to 10, and the percent day period from 3 to 6, and also the slowing from 3 to 6. So I'm going to hit done. The stochastic indicator actually shows right here. Some of you guys will be asking, like, what's the difference between like the stochastic indicator and the relative strength index? So yeah, let me break everything down. Now, the stochastic indicator is actually very similar to the relative strength index. Now, just like the relative strength index actually has 70 and 30, now the stochastic actually have the 80 and the 20. Now, on the stochastic, the 80 mark actually represents the overbought in the market, and the 20 mark right here actually represents the oversold point in the market. Okay, so quick explanation. Overbought is the point in the market that it goes up, that it can't continue to go up further, while oversold is the point the market goes down and it can't continue to go down further. So as you can see at this point in the market, exactly the same thing I just explained happened right here, and the stochastic flew to the 80 to show us that price will not be going up further. Now, same thing for this point in the market. Price encountered a support that made the change of direction to happen, and yeah, this is the exact same thing that the stochastics also informs you. If you look at this point right here in the market, price was actually at the topmost part right here. The stochastic indicated that this is a point of overbought in the market. Mainly, the stochastic indicated that this is actually a point of overbought in the market. You can see that price went down. Now, look at where price went down right here. It actually showed on the stochastic, the 20 mark, and you can see the same thing happened. Now we can see that the stochastic is almost similar to the relative strength index, but what actually makes the stochastic way more better? Now, if you can clearly look at the stochastic, there are actually two lines which look like moving averages. Now, this green line represents buy in the market, and this red line represents sell in the market. Now, whenever you see the green stochastic line above the red one, this is trying to indicate that the buy is in control of the market. And whenever I see the red stochastic line above the green line, this is trying to represent that sales is actually in control of the market. Now, if you look at the chart right now, we can see a clear representation of that. Green above, blue candlestick all the way. Now, we can see the red line is above this green line. We can see the red part of the candlestick is actually taking control of the market. The bearish part of the market is currently in control. Now, we can't really know how good the stochastic is without putting it side by side with the relative strength index. So what I'm going to do right now, I'm going to put in the relative strength index. Sorry that is actually looking scattered right now. Let me just make my point and I'm going to clear everything. Not to confuse you guys, the 70 belongs to the RSI and the 30 belongs to the RSI, but the 80 and the 20 represents the stochastic. So let's look at this point here. We can see that the stochastic clearly showed that it was at its 80 mark, but if you look at the relative strength index, you can see it's just here. And if you look at the charts, the market was at the very top, and the stochastic shows that yes, I'm at my overbought zone in the market, but the relative strength index did not show us anything like that. It was just in an open space. Now we can see right here on the stochastic you can see that price was at the 20 point. Then if you look at the relative strength index, you can see that price was not even at the 30, but price was close to. But and if you also look at this point here again, you can see that the stochastic shows us that price is at the 80, price is at overbought. But look at the relative strength index, it's not close to the 70. So this is one thing that the stochastic actually do way better than the relative strength index. And the best part of it is that the stochastic actually shows us when we are in control of the market, and this is something that the relative strength index does not show us. Now let's still use the same thing again. Price was actually at a very top par in the market, and if you look at the relative strength index, price is not even close to the 17 or the 80. But the stochastic is showing us that this stochastic is very snappy to when price is at the overbought zone or at the oversold zone. But the relative strength index is actually very, it's slow, but it doesn't mean that it doesn't get it right, but it gets it right, but it's just slower than the stochastic. Now let's try to complete this with like the moving average. Now we have the moving average together with the stochastic. Now I'm still going to show you guys something extra with this that will take it to the next level. Now just a quick explanation of how the moving average work is. Whenever you see price below the moving averages, it's trying to represent a sell in the market, and whenever you see price above the moving averages, whenever you see price above the moving averages, it's trying to represent buy in the market. And one thing about the moving average is that it doesn't just show you when to place a buy and sell in the market, but it also shows you like key levels in the market. So price still reacts to those points. Let me show you guys. Price still reacts to those points, price still reacts to those points, price reacts to those points, and when it only breaks it is when it's trying to change a trend. Now let's look at this point in the market. Price went above the moving average and suddenly price went up. You can see the stochastic actually showed us that. And when price got to the resistance part of the market, which is the moving average acting as a key level, the stochastic also showed us that point in the market. Now one thing I also love about the stochastic is that even though price is not at the overbought and the oversold zone, it can actually show you when price begins to change, even though it's not close to those key level. Now let's look at this point here. Price was not actually at the 80 yet. It still showed us that sales is actually in control at this point in time, and that is exactly what happened. Now just like I said, I'm going to give you guys like an extra thing with this, and for you to do this you have to go to your browser right now. So now when you go to your browser, you can actually search currency strength meter. You don't need to put live, but anyway, you can just put live currency strength meter. Now the one you should click on is livecharts.co.uk. so just tap into that. It gives you like the strength of each currency. Now just as you can see, this strength meter actually represents the strength of that particular currency. As you can see, the Canadian dollar is actually at its lowest strength, the US dollar is at its highest strength, the GBP is actually at its highest strength. So let's look at something like GBP USD. Now as you can see right here, GBP USD is actually of equal strength. Now when something are both of equal strength, now they can't actually push each other. It's just like a tie. When something like this happens, we're expected to see like something like a ranging market or a consolidation in that currency. So let's go to like MT4 and check GBP USD. As of now, you can see a ranging market happen here. Clearly a ranging market happening here. Now let's look at another currency. Let's use something like USD CAD. Now you can see that USD is actually have more strength than the Canadian dollar. So if we go to this USD CAD, open chart, we can see that the US dollar is clearly having strength over the Canadian dollar. Okay, so that's it for this video. If you did gain value, make sure you hit the like button, the red subscribe button, and with that being said, I'll see you guys in the next one.